Chapter 9. Money. What you'll need and where to get it. What does it take to turn your business plans and ideas into a variable business? The answer in most cases is money. The amount of money and the time at which that money needs to be invested will vary from one business to another. For instance, some businesses start out with only a small investment on the part of the owner and are either kept small or are expanded slowly using the profits of the business to finance growth. Other businesses start out small and then turn to outside lenders or investors for money to expand. Still, others need hundreds of thousands or even millions of dollars to launch their businesses and require sophisticated management skills as well as investors with deep pockets. The bigger the investment to run a business, the bigger the risk to the owner. Thus, your own willingness and financial ability to accept risk will be a determining factor in the kind of business you start and its eventual size. This chapter presents some of the financing options you may want to consider at various stages in your business. How much do I need to start a business? You need enough money to acquire or produce what you sell, market, and deliver the product or service to the customer. Keep the business running and your personal bills paid until the business is profitable. If you are starting a service business and will run it in your spare time, or if you have a spouse who has a full-time job that will cover all of your living expenses and health insurance costs, you might be able to start your business with as little as $200 to $300 or possibly even less. If the business you are starting will require you to purchase expensive equipment, machinery, inventory, raw material, or rent space, hire employees, make sufficient outlays for advertising or promotion, and or quit a job that you now rely on to pay your bills, you will need significantly more money to start the venture. The best way to determine exactly how much money you will need to start your business is to use a worksheet similar to Table 9.1 on pages 148 to 149 to estimate your one-time startup expenses and the regularly monthly cost of doing business, because it can take time to get your first customers and collect from them if you have to bill them. You should plan on having at least enough money to cover startup expenses and 3 months of operational expenses. Where do I get the money to start a business? Most people get the money to start a business from their personal savings by taking out personal loans or second mortgages on their homes and or by using charge cards to pay for equipment or supplies. Equipment, leases, and vendor credit may be possible too. Family and friends and other private investors are also common sources of startup funds. Sometimes the amount of cash actually needed to start a business can be reduced by bartering or by working out some type of business deal with other individuals or businesses. On rare occasions, a manufacturer, supplier, or even a successful entrepreneur provides some startup funds, equipment, building, or space. This type of opportunity is one you can't really search out, however. What usually happens is that someone with money or equipment spots a bright, industrious, inquisitive employee and figures that the employee has what it takes to build a new business or take over an existing one. What kind of deals could be used in place of money to help start a business? One of the deals is a sweet equity arrangement, which is basically an exchange of work for ownership in the startup company. In other words, one person agrees to work for free or at a lower salary than normal. An exchange gets partial ownership of the business, a different type of arrangement. Beneficial is one in which an existing business provides certain services for free for a startup in exchange for a guarantee of future work in the startup if the startup is successful. Ben Mandel, an entrepreneur who has built several successful businesses, used this technique to produce the pilots he needed for a new TV game show he wanted to produce called I Got a Crush. Mandel, who was expected to spend $300,000 to launch the show, explains, a big part of the budget is for the studio rental. I can pitch my show to the studio and get a lower rate for the pilots with an express written understanding that I will shoot 130 shows at their studios and pay their daily studio fee if and when the show is sold. I have a producer I have worked with before. He will produce a pilot at no cost to me until the show is sold. If the show is sold, he will produce 130 shows the first season. Mandel worked out similar deals with other suppliers. Table 9.1, set up expenses estimates. Use this list of startup expenses below as a guide line to establish how much money you will need to start your business. Permits, one-time expenses, permits, licenses, copyright, registrations, patents, initial cost, trademarks, one-time legal and professional fees, deposits, telephone, utility rent, grand opening, advertising, publicity costs, starting inventory, other one-time expenses, total one-time expenses. Monthly expenses, raw material and parts, supplies, inventory, shipping costs, telephone equipment, office furniture, rent, utilities, fixtures, display cases, interior, exterior decoration, redecoration, signs inside and out, property and general liability insurance, errors and omissions insurance, product liability insurance, business auto truck insurance, letterhead, envelopes, business cards, sales, literature, brochures, flyers, etc. Advertisements, produce costs, advertisements, media charges, mailing list rentals, publicity expense, postage for direct mail or publicity, employee salaries, employee FICA workers, compensation, etc., owner's draw, what you need to live on, health insurance, and other expenses. Your total monthly expenses multiplied by 3 to get total B, monthly expenses for the 3 months. Add totals A and B, total B to get a minimum required for startup. Will the bank give me a loan to start a business? Getting a bank loan to start a business can be extremely difficult. Banks are very conservative and are often reluctant to deal with startup businesses, particularly if the owner has little or no experience running a business. If you have a good business plan and a good credit history, you may be able to find a bank willing to work with you though you may have to shop around for the right bank. If you can't get a business loan, you may be able to get a personal loan or a home equity loan or a line of credit. A line of credit is an agreed upon amount of money you can borrow when needed. How does a bank decide whether or not to approve a business loan? The bank will want to know how much money you are requesting, how you will use the money, and how you will be able to repay it. They need assurance that you and any other owner have the management experience and commitment necessary to run the business. They'll expect you and any other principal owners to have invested a significant amount of your own money in the business. Generally, banks will expect the owners to have investments in the business equal to 1/3 of one half the amount of the loan requested. The way to present all this information to banks is by preparing a loan proposal that includes these elements: business name and address, name, address, social security number of each owner of the business, exact amount of the loan, purpose of the loan, financial statement for the last 3 years, or if the business is just starting, projections of financial data for 3 years, business tax returns for the last 3 years, if available, tax returns and financial statements for each of the business owners for the last 3 years, information about the company's market, how large it is, if the market is growing, who is a typical customer, and how your business meets customers' needs. Business profiles of the owner of the company indicating management experience and special industry knowledge, skills, education, and accomplishments. An indication of what collateral the owner is willing to pledge as security for the loan. Collateral is any asset the bank could take over to get its money back if you can't pay off the loan, such as cash, stocks, real estate, and inventory. What kinds of bank loans are available to businesses? The two general types of loans are short-term loans and long-term loans. A short-term loan is one that has a term, that time from when you get the loan until when it has to be paid back. This is usually 1 to 6 months, but can be up to 1 year. Usually short-term loans are made to cover temporary or seasonal financial needs. Long-term loans are usually made from terms longer than 1 year. Generally, these loans are for major purchases, business expansion, or purchase of equipment or real estate. You will usually have to pledge some kind of collateral to get a long-term loan. What is a secured loan? A secured loan is a loan for which you have pledged assets as collateral or security. If you can't pay, the bank takes over whatever assets you have pledged to pay off the loan. What is revolving line of credit? A revolving line of credit works something like bank credit cards. You are granted a certain amount of credit. You may use it up to the amount, pay it off, use it again, etc. What is your personal guarantee? A personal guarantee is a legal document that makes you liable for the debts of your business. You may be asked to sign a personal guarantee for small loans for which you don't pledge collateral, for business leases, and in some other circumstances. If the business defaults on the loan, you have signed a personal guarantee for the loan. The lender can force you to sell personal assets to make good on loans if you don't have the cash to repay it. What is receivables financing? Receivables financing, also called accounts receivable financing, is short-term financing used to provide companies with a source of cash between the time they sell a product and when they get paid for it. The business pledges the accounts receivable, outstanding bills, as collateral for the loan. If the business doesn't pay back the loan, the lender makes arrangements to have customers of the business pay their bills to the bank instead of the business. What is factoring? Factoring is the outright purchase of accounts receivable as opposed to lending against them. The business sells the receivables at a discount, getting, say, $70 for every $100 in receivables it is owed. The factory may take over the collection function, the factor used to bear all the risk. Nowadays, however, the factor may have recourse back to the company that originated the sale. What is the inventory financing? Inventory financing is a loan used to bridge the gap between the time a company has to make an outlay for raw materials and inventory and the time the raw materials can be turned into products and sold. Although inventory financing may be used in conjunction with receivables financing to gear up for seasonal sales, for instance, it is more individualized than receivables financing. Some lenders will advance only on raw materials and finished product, but not on work in progress, explains Larry J. Bister, the Chief Financial Officer of Crest Converters, Inc. in Milwaukee, Wisconsin. Some lend only on raw materials. Most lenders want to make sure that any advances against finished products only against newly created inventory. They don't want to be stuck with merchandise that is old and has no commercial value. How do I get vendors to extend credit to me? Often all you have to do is ask or say, bill me. Other times, you will have to promise future businesses in return for extension of immediate credit. What are financials? Financials are the income statement, balance sheets, and other financial data you prepare for your business plan. Can I get a loan from the Small Business Administration? Most small business administrations, SBA loans, are guaranteed loans. You get them by applying for a loan through a regular bank. If you don't qualify for a regular bank loan, but have a good business plan and are creditworthy, you might qualify for an SBA guaranteed loan. These loans guarantee the bank that the government will pay a percentage of the loan if the business defaults on the payments. The amount guaranteed is between 75 and 90% of the loan amount, depending on the circumstances and size of the loan. Although guarantees are available for businesses that banks normally consider too new or risky to qualify for traditional business loans, you still must have a good business plan showing how you propose to repay the loan and will still need to put up collateral to secure the loan. If you don't qualify for an SBA guaranteed loan but do meet certain other very specific criteria, you might qualify for one of the very few direct loans the SBA makes. These are generally available for Vietnam veterans, disabled veterans, handicapped individuals, business owned by low-income individuals, and businesses in high unemployment areas. In addition, a pilot program launched in 1992 in 35 cities in the country was making very small direct loans to very small and home-based businesses that might not otherwise qualify for business loans. Whether the program will be continued or not will depend on the availability of funding and the results of the pilot program. Does the SBA offer any kind of loans or financial assistance to small businesses? There are several other types of financial assistance available through the SBA that can be of value to growing small businesses. Among them, the Contract Loan Program. This program offers short-term lines of credit used to finance labor and material to perform a specific contract, hence the name contract loan. To qualify, a business must be in business for at least 12 months and must provide a specific product or service under an assignable contract. The Surety Bond Guarantee Program. Under this program, the SBA guarantees a bid or performance bond, which may be required to get construction contracts, allowing the small business to qualify for the bond it might not otherwise get. A bond is a guaranteed that work will be performed or completed. If the company being bonded can't complete the project, the bonding company has to step in and complete the contract work and pay any losses caused by default on the contract. Disaster loans. Loans to help small businesses recover from disasters such as earthquakes and hurricanes. Export Revolving Line of Credit Program, the ERLC. This program offers revolving lines of credit for small businesses that export their products overseas. The SBA also licenses and provides some of the funding for certain venture capital firms. The firms are known as Small Business Investment Companies, the SBICs, and Minority Enterprise Small Business Investment Companies, the MESBICs. Apple's Computers, Federal Express, and Nike are examples of these type of sizes of businesses that have received the SBIC funding in the past. Where can I get more information about financial assistance from the SBA? To find out more about these and other SBA financial assistance programs, call the nearest SBA office. You will find the numbers listed in blue pages of your phone book under the federal government listing. You can also call the SBA answer desk at 1-800-827-5722 and use the automated answering system to get a pre-recorded message giving the phone number of the nearest SBA office to you. And list of SBA regional offices is on page 474 through 476. Are there other government organizations that will help with my business get a loan? Depending on the nature of your business and its ownership, you may also be able to get help from numerous other federal and state agencies. Among them, the Export-Import Bank, the Department of Housing and Urban Development, the Department of Agriculture, and the Department of Commerce. See pages 471 through 473. Generally, none of the agencies will toss money your way just because you think you've got a hot idea for a new business, but they may have loan programs available that will help your business expand and grow or secure certain types of contracts. You also should investigate state sources of funding. Look in the state government office listing in the phone book for numbers of departments with names like Economic Development or Industrial Development. Call and ask if your state has a funding program available that would help your type of business. You may also be able to get this information from a local business development center. See page 476. A Service Corps of Retired Executive Office, see page 473. Or an SBA office, see page 474. Women and minority business offices, state, city, and federal are still another source of information. See pages 482 and 492. Finally, don't ignore management help available from regional, state, or federal government sources. The training sessions and one-on-one counseling often provided by government sponsors organizations can provide needed consulting and other help at low or no cost. Will the government give me a grant to start a business? Chances are you've seen classified ads in newspapers that claim you can get free government money for your business or something similar. What you need to realize is that while there is grant money available from government and other sources, no one is going to give you a grant just because you want to start a business. In fact, rarely does anyone get a grant to start a new venture. Grant money that is available is generally awarded for the development of some service that benefits the public, or is given to companies that have developed or have facilities to develop a product or service needed by the government. Where can I find out what government grants are available? The Federal Register is one source of information about grants. It is published on a weekly basis on weekdays by the federal government and contains a variety of announcements, including announcements of grants. You can either subscribe to the Federal Register or can find it at large public or college libraries. Since the subscription fee is $195, you probably will want to read the publication at the library until you see it would benefit you and get it on a regular basis. Another source of information about federal grants is a catalog of federal domestic assistance, the CFDA, which is published yearly by the government. This publication is available on some large public libraries and college libraries. Computerized searches are also possible from certain locations in certain states. For example, about the CFDA, contact Federal Domestic Assistance Catalog, General Service Administration, 300 7th Street Southwest, Washington, D.C., 20407, 202-708-5082. Finally, your state or city might have grant money available either directly from their own coffers or, more likely, through federal grants programs that are administered locally. The federal government gives grant money to the state or local government. The local government is responsible for handing out that grant money to deserving local businesses that apply for it. Your state may have one office designed as a clearinghouse for information about grants. In New York City, for instance, the Assembly Speaker Office publishes a newsletter called the Grant Action Newsletter, which lists available state grants and includes brief summaries of federal grants that are open. A state or a city office or small business department or economic development or Department of Industrial Development should be able to point you toward source of grant information in your state or region. Are there any other sources of government money for small businesses? A program called for the Small Business Innovation Research Program offers small business funding to do research for various federal agencies. These research projects are announced quarterly in the SBIR, the pre-solicitation announcement. In fiscal year 1991, federal agencies participating in the SBIR program made 3,341 awards to small businesses, funding research projects totaling $483.1 million. How does the Innovation Research Program work? Congress created the Small Business Innovation Research, the SBIR program, in 1982 to encourage small businesses to do technological research for government and to encourage the commercialization of research done for government. Federal agencies that participate in the SBIR program select certain research topics for funding and then publish a list of those topics in the SBIR pre-solicitation announcement, which is published quarterly. Businesses interested in doing research on any of the announced topics contact the appropriate agency for the complete solicitation, which gives more specific information about the types of research desired. If the business still wants to apply for funding after reading the solicitation, they submit a formal proposal showing how their company would handle the research project. How does the agencies choose which proposal will receive the award? Your proposal will be considered along with any others received. If several companies submit suitable proposals for the same project, the best will be selected for the award. If none of the proposals for a particular project are acceptable, no award is made. Among the criteria in the Department of Defense uses to judge proposals are these: scientific and technical quality of the proposal, relevance to the topic description with emphasis on innovation and originality of the proposal, qualifications of the principal investigator and other key personnel, adequacy of equipment or facilities, anticipated benefits of the research. Among the reasons proposals get rejected are they don't confirm the instructions listed in the proposal preparation, instructions, and requirements section, which is included in each SBIR solicitation. They don't match the needs specified in the solicitation. The company appeared to have the ability or experience to The company doesn't appear to have the ability or experience to complete the project. How much money should I get if I received an SBIR award? There are two levels of awards, Phase 1 and Phase 2. Phase 1 awards are made in amounts of up to $100,000, with work on the projects being started and completed within a 6-month period. Phase 2 awards are for up to $750,000. You cannot apply for a Phase 2 award unless you receive Phase 1 funding for the same project. How can I get the SBIR pre-solicitation announcement? Contact the SBA Office of Innovation, Research, and Technology and ask to be put on the mailing list for the SBIR pre-solicitation announcement. That address is Office of Innovation, Research, and Technology, U.S. Small Business Administration, at 409 3rd Street, Southwest, 8th floor, Washington, D.C., 20416, 202-205-7777. Once I get a business going and see I need more cash, how can I get it? The traditional way includes getting bank loans, inventory or receivable financing, a contract loan if available, funding from families or friends, or a second or even third mortgage on your house. You could also take a partner or limited partner, or general partner usually works in the business while a limited partner usually just puts up money or incorporates and seek investors who will give you money in exchange for equity ownership in your company. What is your venture capital? Venture capital is money invested in a business in return for partial ownership. Generally, venture capital is used to fund high-risk businesses that show the potential for a high profit. For example, $50 million in sales within 5 to 8 years. Capital of firms. Venture capital firms make their profits by selling shares of stock of the successful ventures to the general public. What do a venture capitalist look for? In addition to a product or service that has the potential for rapid growth, venture capitalists want to see a management team that has the ability to take the business concepts and make it work. If you want to start a business in an industry you know nothing about, if you have no experience running business, or if you want to run the business on your own, don't waste sending business plans to venture capitalists. How much money do venture capitalists usually invest? There is no set amount. However, most are looking to invest at least $500,000 since companies require less than the amount are likely not to have the potential to become large enough and profitable enough to make the investment pay off. Will venture capitalists give me cash to start a business? Although some venture capital firms do provide seed money, startup funds for some businesses, most of the time, venture capital isn't invested until there is an available track record indicating that the business is successful and has potential for growth. However, you might find startup funds from one or more local angel small investors, also known as informal venture capitalists. It is usually through these private investors that new businesses raise enough money to get a business going or to do initial development work. Where do I find these angels? The angels often come from your personal contacts, friends, family, professional references. Some people also advertise for investors in their business opportunity section of the newspaper. If you plan to advertise for investors, it would be advisable to consult your attorney first to avoid running amok of laws governing the advertising of investment opportunities in your state. These laws are often called blue sky laws. One way some entrepreneurs try to avoid hassle over investment advertising laws is to advertise for a partner and include phrases in the ad such as substantial equity position for the right partner. Where do I find venture capitalists? There are several routes you can follow. One is to attend a venture capital club meeting in your area. These can help you make connections and learn what venture capitalists and angel expects from you. To find out about such groups near you, call for contact information. Association of Venture Clubs, 265 East 100 South, Suite 300, P.O. Box 3358, Salt Lake City, Utah 84110, 3358 801 364 1100. Other potential ways to locate investors are through attorney, accountants, college, and universities that teach business. Service Corps of Retired Executives, the SCORE offices, the small business development centers, the SBDCs, or the SBA offices. In addition, there are directories of ventures capital firms that describe the specialty of each firm, the size of the investments the firm usually makes, and other pertinent information. Such directories are available at large public libraries. You can also get a microcomputer program called VenCap that lets you search electronically for this information. If you have an IBM PC or a compatible computer, for information about VenCap and current pricing, contact AI Research Corporation, 2003 St. Julian Court, Mountain View, California, 94043, 415-852-9140. Does it matter which venture capital firm I contact? Yes. Venture capital firms usually specialize in particular industries. If you are looking for money for a for a biotech company, it is a waste of time and postage to send your business plan to venture capitalists that specialize in entertainment. What should I do to contact these firms? Do I call, go to their offices? The best way to contact venture capital firms is to get a reference to the firm or investor through your banker, a venture capital club, or some other source. If you can't find anyone to make a reference and don't meet anyone through your own networking, call firms listed in directories and ask to speak to whoever handles your type of business. If interest is expressed, find out whether the contact prefers to see the plan first or would be open to having you present the plan in a personal interview. How else can I find investors? There are also people who rep a plan. Find investors for you through contacts they have. Expect a pay expect to pay a fee to such representatives as much as 5% of the money raised. But this fee should come out of the money raised. You shouldn't have to pay any upfront fees except perhaps for travel, mailing, and similar out-of-pocket expenses your representative may incur. These people are often called financial consultants. You may be able to find them through business brokers or through private networking. What will investors expect in return for money they invest? Investors will expect some degree of ownership and a way to get their money out of the business after a set period of time. The amount of ownership you would have to give up will vary with what you are bringing into the business in the way of expenses, money, value of the business at the time of the financing, and so on. If you have a great idea but no management team, the venture firm might want to handpick people to run the company. These investors will generally plan on getting their money back by selling their shares of the business to others through public or private stock offerings.